Garrett, firstly, on the quarter, we've just seen the numbers and the full year with it. What's your take?
Well, it's a bit anticlimactic because they did pre-announce a week ago. They said that fourth quarter adjusted earnings would come in at 30 cents. So I think Phil's right. It all comes down to the 2019 guidance, the 2019 outlook. Predominantly all of Ford's profits come from North America. And for them, it's just been a matter of mitigating the losses in the international operations. We're a little concerned about the global growth outlook, particularly China, which has posted some pretty disturbing auto sales numbers over the last several months. It appears that things are going to get worse over in China before they get better. That said, Ford has a couple of positives going for it. Is the 60-cent annualized dividend yield. They said last week that they expect a quarterly dividend of 15 cents for the first quarter. So maintaining that, it's about a 7% yield at these levels. So that's an attractive yield. And also, they have plenty of liquidity. They're sitting on about $34 billion of total liquidity, which has been fairly stable over the last few quarters.
Garrett, is there any reason to think that the company would potentially cut that dividend or freeze it as it goes through its restructuring?
We don't see that right now. It's possible down the road, depending on how 2019 develops. But right now, the balance sheet is in pretty good shape to weather a downturn.
Mike, what's your take on this? I mean, and the key factors to look out for on the earnings?
I mean, it's a pure wait-and-see situation when it comes for investors right now, because the stock has already taken its punishment, right? It has a 7% dividend yield. It's trading at half the levels it traded 4.5 years ago. So it is just about getting some clarity on the path to some kind of restructuring and sustainable profitability worldwide. So I don't know. Really, the overall North American sales picture is probably going to say a lot about that, which I'm not sure if Ford is going to comment on in the call.
And Phil, I know you've been following this all very, very closely. In terms of the weakness from Europe, China, some of these other markets, and how it's affecting Ford, how much of this is a Ford-specific story versus a broader issue for the auto manufacturers overall?
In China, it's Ford-specific. They completely zigged while the market zagged, and they're paying the price for it right now. In Europe, it's a combination of Ford plus the market overall. Look, that's a brutally competitive market. Wilf, you're familiar with this. I mean, market share over there, if you gain 0.2%, you are doing well in Europe. That market is in really bad shape right now. South America has never been a consistent moneymaker, either for Ford or really for any automaker. And so you're dealing with currency issues down there and a very up and down market. It can quickly reverse one way or the other. So it's a combination of their own self-inflicted problems in addition to some global challenges.